let's say 2 weeks ago, I'm having a conversation with my wife, and she says to me, "Have you seen the interest rates?" And I said, "Yeah, I'm pretty sure I've followed them pretty closely, honey." And she says, "Have you seen what we're paying on our interest for our primary residence?" I said, "Yeah, it's gone up significantly," because in her mind, she remembers during COVID when literally I was paying under 0.5%, Patrick. I was paying 0.4% because I'm on a variable on my primary, 0.4%. So like literally for 2.5 years, all of my payments have been going to buy down, principal buy down, essentially very little towards interest. So now my wife says, "Well, listen, have you seen these interest rates? Our interest rate is back up to whatever, 3.5. I forget what the exact number was, 3.5 or 4%, whatever it is." I said, "Yeah, honey, that's more normal. That's more normal." "Yeah, but what happened to 0.4? I said, "Hold on. We just went 2.5 years where we got this incredible deal called 0.4% interest rate, and all of that money went to our principal buy down. I'm thankful for that." Right? Here's the optimist part. I'm thankful for that. And now we're back to normal, called 3.5 or 4.5, whatever it is I'm paying. I'm not 100% sure. But the point is that like a lot of investors are like, let's look back and say, wow, what a deal we just had in the last 2.5 years. And this goes to our price drop conversation as well, where prices, yes, have come down, but not even close to erasing the gains we've had over the last 2.5 years. Like, we got to be real about these numbers and not believe the crap people are reading in the headlines.
Well, I think, yeah, and I get that. And what's happening, though, of course, is people are future thinking. You know, right now, the whole conversation, and this is where I think
they're not future thinking, they're awfulizing. That's different.
Yeah, they're awfulizing. But, you know, at the end of the day, that's what's driving the headlines. You know, once again, headlines, social media, people are looking into the future. They're anticipating a recession because that's what they're told they should anticipate. They're anticipating even higher rates because that's what they're told they should anticipate. And, you know, I get all of that, but I think there's something that I've certainly learned over the past 2.5 years, and that is whatever your thesis is, whatever your view of the world is, you need to challenge it on the fly all of the time, and you need to be willing to change it, because what we haven't been through before is a pandemic. I did not think that the government, our Bank of Canada, or central bank, I should say, they're the same thing, although they're supposed to be separate. That's a different conversation. The point is this, is I didn't think they would be willing to crash an economy. But guess what? They are. So will it? I don't know. Maybe. I think there's you look at the direction of it, but here's the thing about it. Let's go back to a little bit of economics here. Our GDP is still positive. Although it's trending lower, it's not sunk. We are looking at GDP growth. We're looking at population growth. We're looking at immigration and immigration. And guess what? We're seeing all of those numbers still being very positive. So is there a chance of a recession? 100%. But man, you know, there's a lot that can go on between now, 6 months from now, or a year from now. And anybody that's telling you that they can see what's happening in a year from now is just not telling the truth, because you can't.
I totally agree.